Here we go. Here we go. Well, it's kind of interesting. What? Okay. That's a gap up. Another one. It's been gapping all over the place. Okay. I don't know how I feel about this now. Just leave it there. Good morning. Well, I know SPY gapped up, but I was much more, I don't know if the word is concerned, but curious about what the heck was going on with IWM. It is really high. Like, that's a big gap for IWM. Like, huge. I mean, I'm looking back, I can't see anything quite like it, so. Not since, I mean, it's just massive. $6? It's really gonna happen? Makes me really nervous. It's gonna like flush all the way back down or something. Yeah, I don't know what to think about it just yet. It's kind of a mess. I hate this kind of stuff because my gut tells me I want to just like get out. I do not like gaps that are like that huge, but on the market, it's just not usually a positive sign. So hard to say. Here you go. I'm reading it right now. We were talking about this yesterday, and someone was saying that the demand was too low, but it says in the week ended June 7th, U.S. mortgage applications surged by 15.6% after a previous decline, driven by a drop in the 30-year fixed mortgage rates to 7%. Refinancing applications jumped 28%. New purchase applications rose 9%. So, we'll see. I'm not seeing the CPI number, though. I mean, there's a lot here I could read through, but it's just like the morning buzz thing. All it's saying is that they're way up ahead of the meeting. What did the I know I'm in it pretty heavily, but I'm nervous because I don't like that kind of a move. I mean, I don't know who does. And frankly, it could just open like right at the top of this channel and just dump all the way back down. I mean, I'm not trying to like sort of squash people's hopes and dreams here, but I mean, there's a lot of time in the day for someone to try to get out of a position. If it's a short squeeze, they'll just kind of level off and then break out and keep going if it can find momentum. But I don't know, man. This kind of stuff always wigs me out. Hope squasher. I'm just saying, like, you gap up that far, it's hard to just keep running. I mean, I guess there's been times of like continuation on these reversals, but even on like these gaps, there's retracements back to get them usually. You're going to have a lot of people playing the gap this morning. That's what I'm trying to say. So 206 pre-market is really, really high. There's nothing particularly, bad about that number. I've got a marker at 206.35, so there must be a reason we're kind of opening right below it. It's probably I don't know why I have that marker. There must be a reason. It's probably a previous from a long time ago. It's acting like a supply level, but that's not, locally, it's definitely not the top. So it must be from back here. I don't know. See, like, I go through and I'll put these levels on my chart, and then I'm like often forgetting kind of why I put them there. So, okay. So from way back, this is the here down to 202, I would say, maybe 204 rather. 204 up to 206 would be your real support level, and then, or your early support, prelim kind of stuff. Like, if you can catch it, you might see it push back up finally. The rest of this looks like it's kind of just up thrust. This 208, 2012 from way back. You can see they're just kind of like pushing up back into this area. And really, the supports that were found were a little bit higher. I would say they're like 208. So, yeah, unless IWM can get a really good push to 208, I'm going to kind of have to say like nothing about it just yet, because really, like, again, with that kind of a gap, you could see a pretty big retracement this morning, maybe 202, and then advance. I'd love for it to just go, but then advance back above the main creek. So I've got it drawn out above here, and that to me is kind of the big one. So market's about to open. We're about to see what happens reactively to this big jump. So what happened with CPI? Someone said there was CPI news, but I'm not like seeing it on my news feed. So yeah, it's probably going to start dumping first thing. People taking profit, and then of course you're going to have shorts trying to kind of drop the price. CPI 0% month over month, insane report. 0%. Somebody walk me through that. What does that even mean? I'm trying to like wrap my brain around it really quick. My coffee level is pretty low still. This afternoon I'll have answers, but right now I'm like, huh? Huh? Charge point crossing 190. I'm not in SPY, but it's moving up. I'm really only looking at IWM today, and yeah, it said charge point went up. I think it hit a trigger. I'm getting these little bleeps all over the place. Yeah, charge point gapping up too. So looks pretty good. I don't know, like, so far so good, I guess. There's never like any kind of perfect situation. I don't know. That kind of stuff, you're like, whatever. Maybe it comes back down and chops down the rest of the day. I'm not really sure. So I told you guys yesterday I was looking at IWM because the calls were back down to like 30 cents for those. And actually, I went to August this time for 230s. And so what I've noticed, at least for me personally is that if I can get in around 30 cents, most of these tend to do pretty well. If you get the target right, MPW is way up. It's also gapping up though. I mean, there's just a lot of problems with gaps, so I don't know what to think about it just yet. I'm not gonna speak out of turn. I don't really want to estimate that it's just gonna run and then nothing happens, And then GameStop and GME and GameStop and AMC, are both gapping down this morning, so they're leaving gaps above potentially. GameStop's still within its channel and technically could go even lower. AMC is not. AMC definitely broke down yesterday out of its channel, but we were talking about maybe this being like a fifth wave, and maybe we misjudged it, and this is all the third wave. And so you could have one more push to 570 today, potentially, So right now we're sitting at 515. It's about right. That's about what you would expect this morning. There's a lot of, crosses here. Like you've got kind of this longer term trend that we marked off. We're not really sure why it's super important, but it seems to be respected a lot. So we're marking it off. And then just kind of your main upward parallels, which are just sort of structural. I don't think they're going to last forever, but they're here for now. So 491 below still could act as some kind of support. If we see a gap fill, we'd have to run up past 535 in order to have a chance of a real run up. So it could just be that these guys are lagging behind a little bit and that they're going to see their push up after all. But it'd have to come all the way up, fill the gap, and then continue. It can't just stop here because this is the creek. So this is like the main parallel. It's like right at 524. So for now, this is still, I'm still indifferent about this. Like I don't feel like super confident about it either way because it's sort of sitting in a place where it could easily break down. And then, it's only a few cents away from a breakout. At GME, I had a lot more confidence that we were going to run up to that $30, $33 area. Likewise, just like AMC, it's kind of like in this position where, if a gap fills, that's great. I would like to see it then continue to make a higher high. Obviously, that's important. The big news this morning is, I guess, the CPI data. And, it does look like it came up and bonked its head on that 206 level, which also is like the creek. So like the main upper trend. So it has to find some support. If we're going to see any kind of continuation here, it has to find strong support. I'm curious. I'm not going to be able to check right this second. There's a lot going on. But I'm curious to see what charge point just racing up to $2. I'm glad I kept buying in there, but it's been a really slow mover up till now. So I'm kind of interested to see if it can actually make a bigger move here. And I'm expecting 230, maybe even up to like 3. But we'll see. It's up 7%. That's pretty good. I was making a joke about this because like they switched it to a buy rating or something. And I was like, well, I like ChargePoint before it was cool, Stupid, right? So MPW is another one I watch. I'm really pretty heavily invested in it actually at this point. And we'll see what happens. Like also a gap up. Not as huge as some of these others, but I don't know. It went back, it hit the creek. It definitely made the retracement. There's no question there. Really, this looks like an automatic reaction. Phase B top. This could just be support in B, which means that, and this is going to kind of apply to a lot of stocks today, because if this is just a support in B, then this could still go down for a spring. I had drawn this out yesterday just on a whim because it's possible that this has like a spring action still. So it looks good. It made a higher support. So I guess we're just going to wait and see. If it can jump this creek, I think it's going to go. And if not, then probably going to end up coming back down. I mean, obviously that's sort of all there's left, right? But I think you might end up coming back for a spring. So GME is at 1330. It's about to fill its gap up. I think it's about done. And then it's still kind of pushing. AMC pushed up again. It's at 530. We know 530 has been kind of a stopping point. I mean, this is one of those levels, and especially yesterday, good grief. I can't even count the number of wicks we had to that on this chart. It's just tons of them. So, yeah, I think if we break here, we should see a decent like push up. I think we'll probably hit that 570. And if we can't, then I don't know where else we're going to go but down. So I think we're going to head back down towards that 470 mark. Yeah, I mean, IWM holding up surprisingly well still. It's at 206. I mean, I can't even... Right now, I'm like, kind of like, my mind is like blown because I'm just not expecting a move like that today. So I'm kind of trying to figure out what I want to do. I mean, calls are up like 100%, which is really high. For me, I think that's like a really good turn, but I'm curious. So my gut tells me that it's probably not going to just race, and that we were probably going to see some kind of a retracement, maybe around that call this afternoon. That tends to cause things to kind of go crazy, you know. So maybe we'll see it kind of dump at that point. I'm not trying to be like pessimistic, but it's hard to know what to do when you've got this massive gap below you. So no change, and it was expected to be 3. 0% change. Oh, expected at 3.4, came in 3.4. Yeah, I know. IWM's going crazy. I see it slowly bleeding back down to FOMC. I kind of agree with you. I think that's kind of my vibe that I'm feeling. Because I don't know why you would just break out here. It seems strange. I mean, maybe there's a sort of an underlying anticipation of the remarks. Because now they know the data. People are like, well, it's going to be good. I mean, maybe. Or vice versa, and they're pumping it up in order to get out of positions. I mean, you got to make it... I don't want to make it like a game or anything, but there's definitely a lot of possibility. We've seen FOMC cause the stock price to drop radically, and then it just reverses and goes the other way. And I always think about it as like probably just people swapping out positions. Maybe it'll be dovish-ish. Well, I mean, a 0% change, probably unexpected, so that could result in a pretty big change. So we got to make it count, you know, that's all I can say. So GME is back up to 30.58. I don't know. It really just needs to see that last push up. I really wanted to go to 33. You know, obviously, like, there's going to be a lot of bullish sentiment about GME because of the offering being completed, and they raised a ton of money. And at this point, it looks like unstoppable. But, you know, just keep in mind, like, the setup here, it's still, like, how do I say this? Like, so far, there's really been nothing about this that makes me think that it's not going to pan out. All right, so AMC pushed above. So there you go. So it got above that main trend here. I think we're going to need to just see some support and then continuation back above 550. So it's at 533. So pushed over the 530 mark. Could it be a fancy hook? Sure. But, you know, we'll know if it can get back above 5. 47 with support here. This is the previous creek from yesterday. It's also an intersection for the buying climax. So dovish. Yeah. I don't know, man. Maybe the markets are just going to go. It's really hard to say. I get the feeling, though, it's not going to... I think cuts are off the table. Can't imagine a hike. So higher for longer is what I'm guessing. Yeah. That's kind of where my brain was going. But you guys are doing all the work for me, which I appreciate. Because I'm still drinking my coffee. I was going to try to get up early, but kind of didn't sleep well last night. So ended up, like when you go back to sleep in the morning because you're like dead and you're like, I can't do it. I was like, I'm just going to take the extra 30 minutes. That's how I felt. So I don't want to be a negative Nancy here, but I do think that this is still in a reaccumulation. So my thought is at this point, we still need to see it top off and make some kind of a retracement here. And that's not going to be the popular opinion with the market kind of bolting. But I imagine it's going to have to do with this Wednesday into Friday move. So, again, not trying to be a downer, but I'm going to have to just trust my own TA on this because unless it does something completely different, unless it just proves otherwise, I don't expect it to just keep running past about 33 or 34 here for now. It would be nice to see GME push higher here and go above the this previous parallel. So that would be up in near 40. The reason I say that is because AMC did that move, and I like it. I like that move. I think it makes sense. You're setting up like a higher creek cross later. All around, that makes a lot of sense to me, but... All right, my cat's whacking the bowl. Hang on, I gotta get her some water. I appreciate you communicating with me, but you do that and then you flip the water bowl over. Or not. She just didn't even want to drink it. She just walked away. Cats are just crazy. You guys are funny. I'm not at all like that Ryan Kitty guy. He's very, very risk on. He is committed 100% to everything he does in that GME play. And I'm not sheepish about it. I'm just not. I never felt like any trade was worth, risking everything for. So that's just not me. And I don't think there's anything wrong with that. And obviously it's paid off very well for him. We were talking about it in the Discord, and it's kind of like these rags to riches stories are super cool. But I totally agree. I think Titleist guy said that it was you can have a couple of those, but then there's every one of those, there's dozens of people that just get wiped out in the market, doing the same thing. You believe in a play and then you YOLO into it and then it just crashes, So, all right. I mean, it came up to 31.81. I mean, in theory, it shouldn't be done, but I don't know. Shouldn't is a big word. I think it could be done because it looks like this is where we had support roughly back here. So, yeah, it's like a support level from back here. So, it could be done. Just kind of tapped on that and then retreated. kind of surprised it didn't go the distance, but maybe we'll see it buy back up right here. There's a little bit of a support at 2980 area. So if it can hold there, maybe we'll see the other push. But it just kind of got slapped back down off that level. So that's why I'm kind of scratching my head like, well, yeah, I mean, IWM's just tearing it. What is going on? It broke out of its trend. Maybe we're just going to see it push to the creek into that meeting and then retreat. But it's above the 206 now. I think we're going to go to, man, I don't know. This is like a lot. I guess it doesn't really matter at this point. It's pushed above. You know, oddly, this is very similar to what we saw in AMC. We were watching those two peaks and it pushed above. It's just like setting up these jumps for later. And always the same thing, you know, in some regard. So in terms of a wedge breakout, this is way beyond, because this wedge only needed to do a 62% retracement. It's way beyond that. Yeah, I can't even get my silly chart to load. Oh well. Trying to use the trading dashboard thing on Fidelity, but there's just like nothing there. I mean, that's good. Yeah, I don't know. My calls are up like 100%. That's about all I could say. There's really nothing else to see right now, so they're just look like they're rocketing, but in the grand scheme of things, it's not that great. I mean, like the calls that I'm in right now, I've been up at like $4 before, so the fact that it's only like up to 70 cents from like 30 is not, it's not bad, don't get me wrong, but it's also not really like crazy yet. They're out for August, so I've got time. We'll just see what happens today. My knee-jerk reaction is just get out of them because it's over 100%, and that's usually about the time that I get out of stuff. What I might do is just cut back a little bit and then let the rest do whatever they're going to do since they're way up. Because that might be the wise thing to do, is just take the initial investment out, and that way you're just running on profit only. I could probably do that. So people call it like house money, which is really more of a gambling term. But if you get to a position where you're like, I don't know what to do, and you've got like a huge investment that's kind of blown up, maybe not huge, but you got a big investment that's like blown up and it's over 100%. At that point, if you trimmed half the position, you've basically recouped the initial cost. So like, yeah, I mean, at this point, it's kind of like, I don't know why you wouldn't. Because for me anyways, it's like there's a lot that could happen. And now I don't even have to worry about, like I'm literally just playing with like house money at that point. So yeah, so it's kind of interesting to think about, but so if you have enough of those positions to do that, then it might be worth it to do that, you know. So it's sort of the safe way to do it. It may not be the most profitable way, but you're basically guaranteeing your original investment. So that to me is like a huge deal, because then you're basically just running on profit only. Then anything else that happens, even if it went down to like nothing, you've already scratched, so it doesn't matter. And then if it does go blowing up, then you can reap the benefits of that. So I think that's what I'm going to do this morning. Yeah, I think I'll be happier with that. And I don't have to stress about it at all if we do see some kind of crazy turnaround. And it's not that I'm not bullish. I'm still bullish for this to go up to 230. So I don't want to go like too crazy getting out of positions because you want to have profit. But I also just want to have profit. Like I don't want to be in a position where this comes way back down or some silly thing happens during the Fed meeting, cause people to second guess. And I just don't know. That's one of those like lurking variables. You just can't really anticipate it. So let's go to the 4 hour. AMC's at 520, GME's at 29.48. I'm watching them, but I'm not watching them at the same time. Kind of just waiting. I mean, they're obviously back down, so GME's holding a little bit stronger. It still hasn't really broken out of any trend yet. AMC's back down beneath. Looks like a fancy pants hook. This is a widening at this point, so it looks like a big flush. So just be mindful of a potential downside from here. Yeah. Yep. So I'm trying to reposition some stuff really quick because I want to make sure I'm good. Technically, I'm still profiting actually, so yep. All right. Now I'm just running on only profit, which is cool. It's a good feeling. So what I did is I just cut my positions in half because it ran 100%. I could have waited, if it ran 200%, then you don't have to use as many, you don't have to get out as many contracts to secure the original position. But because of my uncertainty about FOMC coming up, I feel more comfortable personally if I just let it be what it is. So yep. So I'm like pretty happy about that. Yeah. So right now I'm like, that's a good trade. And then I don't have to worry about it because now I'm like, nothing else. It's already profitable. I already made money on it. So it's not even like, I don't know, zero risk. It's kind of nice. And then if it pulls back and I wanted to add more, you could add more. I mean, it's just a killer, easy play. So MPW, yeah, I'll take a look. A diving board, I think. Yeah. Yeah, that's what I just did. So, yeah. Whipsawing. Yeah. Yeah, it's a flush. So anytime you see that kind of whip action around a level, you're guaranteed to make a move hard one way or another. I almost don't. I mean, we don't never see it do that unless there's going to be a big turn or another big push. I wouldn't be surprised to see a big push, but it would be some kind of like a massive upthrust motion probably at this point. Because we're entering this from a downward angle. That's just my thought behind it. Like you might get one more big push, but it would probably be sort of a last ditch push. So yeah, no, I made my decision here. This is done. I don't have to talk about this anymore. The reason I was talking about it out loud is because I'm really just parroting other people's thoughts and strategies. But yeah, I mean, it's a simple enough strategy. If you're up 100%, you can trim your position by half, and then you're going to have nothing but profit, because everything else that you sell now is like above the original price that you paid, which is great. So you're literally you're just watching your profit, which is cool. And then you have no risk really. Granted, if it goes negative, you're going to cut back into it, but as long as you don't go negative. Yeah, and I don't feel like that's super likely here. I think it would take a minute to happen. So yeah, I don't know. That's just my thoughts about it. So now if there's more upside is what I meant to say, or just flat or whatever, you're just kind of watching your profit. I like that better because then you're not worried at all. So if you're new to options, that's one of those things that I can't really tell you what to do, but I know that for me, that's been really helpful to like lower stress levels and just really be easy riding through there, So yeah, I was gonna look at MPW. It's coming back down pretty hard here, and I don't really think that's unusual. I mean, we were talking about it this morning. Like gaps tend to be filled. I mean, if it's a breakaway, you have enough volume here, it should just fill it. Sometimes, this is what I was kind of talking about before. Sometimes and this applies to any stock, right? So here you have a bottom, right? And then there's an auto reaction. And the auto reaction goes back up usually to like preliminary. You can see that support area. And then you have like a phase B top. And this is how I'd read this range. Maybe I'm getting it a little off, but I think I'm pretty much on point. So this is a distributive top for sure. It had that push up and then failed to advance, and then it dropped beneath the creek, and that's that. But it didn't really drop the creek until the second gap down, so that's why I was like not sure about it. And unfortunately, it did. Probably could have read into it a little more, but I'm also long term on this play. I'm not really looking for immediate immediate booms here. So now you've come down, you've potentially made another bottom here. The trick is that, and this is kind of weird, is that usually you see that this jumps kind of a local trend, and I think it did. So I think that would be enough right here. So it went above this downtrend, and that's usually how we kind of measure these moves, is like, is it breaking out of the trend? The answer is yes, it broke out of the trend. So I think at this point, it could be setting up for a spring action of some kind. Doesn't have to be, because remember, there's accumulation schematics that have what we would call like an LSP, last point of or LPS, last point of support, which is they don't actually ever come back down. Instead, they just rise and they continue above kind of this outermost creek area. And in our case, I drew it over here, but really it's from the top at this point. So we would want to draw it way out here. And roughly, that's where it is. So like, once you advance above this creek, there's not really any going back. So this outermost blue line that I just drew is pretty critical at this point. And it's a lot like AMC and GME. Like, it has that outer mark that we're watching, and once it jumps that, you're kind of like, all right, well, it needs to go now. So in terms of a wave pattern, it's pretty easy here. You can see that the waveform has like a pretty straightforward setup. Like, there's a very clean kind of arc going up, or I should say a cross going up. I need to just sort of keep my terminology right. Consistent. So like, yeah, again, so at this point, it's kind of like, well, I'm expecting a bottom. And if I don't get a bottom, that's not good. But this makes perfect sense to me. That's why I drew it the way I drew it, because you have a breakdown, right, of the prevailing uptrend. And most people are going to read that as really bad. But then when you look at the major uptrend right here from like this low back near earnings, okay? But then when you look at the bigger picture, you're like, well, it's sort of building out to be a pretty solid reaccumulation here. Like it made a higher support, it didn't go below just yet. It has a gap up, and a lot of times what you see in the market is that the price will push high before it goes low. And for a spring, it almost always happens that you get a push up before a drop. So it would not surprise me to see this come down for a spring right now. And my expectation would simply be that it's a time-based thing, like however long it takes, probably to get down to, again, a creek retest. There's not really much else to it at this point. So however long it takes to get down here, it could chop a bit more sideways and then drop again. And then if it goes below 482, then I would say it's possibly a spring. When and if that happens, you have to then see it kind of make the advance back up. And really what matters the most is not, and honestly, this could take a while. This could be just like AMC. We're talking about the 21st or something. I mean, it could take that long because this could go sideways a bit more here. It's hard to say. But then you're going to look for a retest on 485. And if you can get the retest here, and really it's like, I should draw it like the other way because you want it to be support. If you can get the retest here after any kind of a spring action, it's not confirmation, but then you're going to look at the next creek, and that's where things can start getting kind of fun because it should mark up in that way. So if it's going to go, right, that's what you would see. So IWM still sitting at 206.15, GME's at 30.30, AMC's at 5.28. We're just kind of whipping around like crazy. We're not really moving. Maybe we don't move till FOMC, to be honest. I mean, it kind of seems silly to just sit here, but maybe we sit and chop and kind of head down a little bit till that meeting, and then we'll see more bigger action late this afternoon. Yeah, it's kind of a hard to say thing. Anyways, so what I might see if this were spring is that you would come low, and then as you come back out, you're basically advancing again. Maybe you drop, just like you did here, you drop this creek, and then you find a support, and then you would push up high. And at this venture, you need to break this outer creek, so, you know, it could happen fast, it could be a little slower, but you pretty much do this, and then you're good to go. You just have to then make the advancements that you need to make. And it's really like anything else at that point. You're just going into an SOS. So it would look something like this. It's not going to look exactly like this just because I drew it that way. And that would be cool if it did, but I don't expect it to look exactly like this. Yeah, my expectation would be that when it pushes back out after the test, it makes a higher move than if we were to stop. Like again, this is assuming a spring. Let's say you get trapped under 5, then when you come out of the spring, you'd go back and you do the retest. You go back over 5, and then you would advance. So yeah, above it, and then go up, and then you jump the final parallel finally, and this outermost creek. Now that's the jump of the creek, and you form LPSs along the way. This is a very fast way of describing it, but I think it's possible because of how quickly this moved. So I think the timing of this is almost perfect, but this is one of those things where I'm like, hey, don't quote me too much on the timing here, because though there might be some other ways of finding out once we make the bottom, I'm really just using kind of trajectory in, trajectory out kind of stuff. And technically, like, again, like that bottom could take till Monday, and then you could have a push up and then come back down and then push out again and blah, 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 blah. I mean, this could be much later. I'm kind of implying the same timeline as I am to AMC and GME, which is, I think, July 1st, I think over the next 2 weeks. So maybe that's wrong to do that, but that's kind of what I'm doing. So I'm making an assumption here that this moves going into that Monday the 24th, that this is already up in an SOS. And then, alternatively, this never makes another low, in which case it's just called an LPS, not a spring. There's a similar action to it, though, which is that you would come above and jump the creek. So that's kind of the main thing that has to happen here, is like wherever this happens, it has to jump that downward creek. Okay. So I actually still have buy orders set for MPW because I'm like, I want to see a certain price, and I know that if it flushes hard enough, I might be able to get it. So I've been setting low bids because I want to see if I can get in some final calls. I was talking about earlier, I don't really have that kind of roaring kitty conviction, but I'm pretty, I don't want to say convinced, but I'm fairly bullish on some of these, and I'm going to play them until they're not, you know what I mean? And then I'm just going to cut and run if it doesn't work out. So like MPW, I've got an average of like 11 cents for my January 17th calls. I got a lot of them at this point. I bought the most at 9 cents, which makes me happy because I got really low price for those. They've never gone back down since I got them. I got them like way back on like May 1st, which if you recall is like before that big drop and then the run up. So they were cheap here. And then they actually went up in price because the volatility was rising. So I actually got them at probably the lowest volatility locally for the price. Now the price has stayed elevated, so even though volatility has come back down a bit, at least on this 30-minute chart, it looks like the price never really came back down. So that was the best deal I got. And then ever since then, I've bought some for 13 cents. I bought some for 15 cents. I bought some for 12 cents. And I'm averaging 11. So I've got a price, I got a 10 cent. I don't think it's going to hit because they've not been budging on 11, but which is probably why my average is at 11 now. But I've got some 10 cent orders that I've had in since, I don't know, like a week ago. Just sitting there doing nothing. But if they hit, they hit. If not, then whatever. So I'm just letting you know. All right, let's go back around the horn here. So 206 is the price here of IWM, and it's pushed above, I think at this point, like 2 times. So I've had the 4 hour on, right? I'm looking at it as a longer term move right here. And there's a lot more potential on the 4 hour because you're sitting around like 50 something RSI. It's probably pretty much overbought on all the time frames below. Maybe not 2 hour, but probably 1 hour and below. It's getting to that point. Yeah, it looks like a big bloop. Now I don't know that springboard, diving board thing, but it might be, where you push up, you drop back down, and then you spring off. It's like a jumping action. I've seen that before as well, and the high volume here bothers me, but we'll see if it dries up. If the volume dries up and we're still up high, that's pretty positive. So right now the selling volume isn't outweighing the buying volume. It's all kind of all around pretty high. So we're going to watch. I'm most concerned about 206 as a level, and then really where this downward trend is, which is the top of the channel. Because if it comes beneath 206.04 and it generates some kind of like a hooking action, as soon as that happens, and if you start making a lower low, you could be in some trouble. So you could be. I'm not saying you would be, because technically this is still a really high move. Like this is a big move, so there's a lot of potential here for. This is so weird. There's a lot of potential. I rightfully identified it as a bottoming action or some kind of a crazy bottoming action, but I said yesterday, I was like, this kind of reminds me of like bottoms, but 1, 2, 3, 4, the quadruple flush. You don't really see that unless it's like a bottom or a top. It could have been either one in this case because it's the end of a long downtrend wedge. Looked more likely to be a bottom, but I would not have anticipated this. I did not anticipate gapping up to 206. I would have thought it would have broken out after FOMC, which is the way I put it on the chart after the meeting. So, yeah. So really, AMC hasn't moved at all today. It's at 0%. There's a whole lot of whipsawing, right? But there's a lot of it. And look, you can see this is not really a trend, so don't follow this. But if you were to draw a trend here, I guess I can change it. That's probably where it is. This is bouncing between that. It's a widening here. There is a cross, so it's not impossible that this still continues. In fact, even though it's rejecting on that upper move there, I don't think that the cross is necessarily finished. We don't really have a lot of points of contact, so that makes it kind of tricky. But this could be like a middle M right here. You see that push up, push down. Let's check the 1 minute. Yeah, it is an M. So this could be a bottom of a wave. It's not out of the question. It is rejecting really heavily on this guy, which makes sense. Like, I would have expected there to be a whip around here. Why? Because there was a whip around back there? Well, remember, this is the first big M cross that we had going into the bottom. And when we talk about these shallow S curves, really that's what we're kind of looking for. We're looking for that pattern, the M pattern, and then you want the middle. That's a really key. So you see that? You want the middle of the shape because that tends to be the trajectory that's used. And you can see why, because the wave goes up, down, up again. So this is the last area that you have before you go into the lows for the bottom and start reversal. This is the last area that you had kind of bullish trajectory. So the resulting action would then bring you back up to that marker. Well, we hit that, right? That's where I exited my position, was right there, because I don't have any real expectation that it necessarily goes any farther. So now when you're seeing this structure, you're like, yeah, that's pretty much exactly the way you would expect it to happen if it went above, is that you'd end up with this kind of whipping around motion. It's probably even like a close to a 50-50 motion, right? So those end up being pretty vital, overall. So that's why I marked it off. It seemed pretty easy on AMC. GME's was not easy. And I still, for the life of me, can't figure why we haven't come up higher. There's no way to draw this where it doesn't seem like it's significantly higher. And the only thing I can think is that, I don't know, maybe I got I really don't have any ideas. Maybe that was supposed to be it. It's like this lower one. It doesn't really make sense to me because I don't see that as the cross. It just looks like the breakdown. Maybe this, I don't know, this curtain rod drop. I mean, there's a few here that it could have been, but I was going with what I thought was probably the better one, which was this guy. So I still don't really get why we didn't go up there. But, in the grand scheme of things, if it hits a hits a supply level, I wouldn't be surprised that it dropped. So I'm like, okay, whatever. I mean, at this point, it could have been a top. I'm not going to hold on to, necessarily hold on to a hopium, then it has to go higher at this point. It's a little different because GME never broke its uptrend. And that's something I'm kind of watching carefully and thinking about right now because it's still sitting in the uptrend. So I'm a little curious as to why that's the case and why we haven't broken down. If it's not going to go there, okay, why are we not breaking down then? You know, maybe we still are going to go there. I don't know. And AMC is the same way. I know that you've seen like a double whip here. So you've got a whip around. And it's kind of silly to say whip so much, but you really do. I mean, you've got to whip around this trend, which is, again, the previous, let's call it a creek, but it's more of like a trajectory for, and it is kind of a creek, but it's more of like a trajectory for, because of the resistance and support for the bigger wave. So within the smaller waves here, you're getting a build out for a bigger wave. And that's the kind of stuff that when you start seeing it and identifying it, you're like, oh, you think you're some kind of wizard or something because you're able to identify like intersections. That's triangulation, right? And then you're seeing like there's a probable spot of triangulation up here, which is why I had this target. As you start identifying like those patterns, it doesn't mean it's going to go there. It just means that if it does break out from the creeks down here, that's a likely target. So anywho, I was saying like there's a whip around that's kind of doing two things. Because you can see once it came down here, it's just sort of gravitating along that parallel. So here's what I'm thinking. I'm not really necessarily expecting to see 570, but there is another trend here, and there's another whip. You guys are like, what? It's a three-way whip. There is. It's a three-way whip. There's one going down, there's one here going up, and there's another going up, which is this main uptrend. So there was tons of intersection right there. I mean, that's a lot. So there's like a three-way whip going on. So the reason that would be important to identify at this point is because if you're still looking for possible upward targets, yes, the head and shoulders one that we've kind of measured in, that's the 571. That also was a distribution and support level up high, so we want to keep that in mind. It acted as sort of the main distribution level, I would say. You saw the cat ears form right above them, and then you saw the double up thrust through it. So 571 is a big deal. But if I'm watching this now, there's a lot that would need to kind of happen in order to see an advancement. So one is this whip would need to provide support. Two is this one would potentially need to provide support. So you'd have really 1, 2, and then 3. And it could be that we never actually get to 3, that 3 ends up being, it's possible that 3 ends up being kind of that that stopping point, right? So that kind of makes sense to me. Timing wise, we could do sort of what we did down here and measure out maybe each of these sections and just see what we can see. So that would be like section 1. That seemed to work pretty well. So we're going to try that again. Yeah, so it'd be like pretty soon. Like really soon, perhaps. Section 2. And so I'm kind of ignoring the markdown as much as I can. So maybe like that. And then you can see like in 3 parts that is measuring out pretty closely to, yeah, it's measuring out pretty closely to being kind of that intersection right there. Well, that's not really enough to go off of, is it, Booksy? No. So the other thing I'd look at is the M shape down here. So then you don't really have anything else except for possible timing similarities that maybe it gets there around that time. So it would be like needing to move pretty soon, and then you might expect it to reach there over here. That's not really enough to base a trade off of. So what we would want to watch is for a breakout. So you've got M1 here, and then there's a low. So that tells me that there should be an M cross in the middle here, and there is. So as soon as you see the 1 shape, you can draw your creek. This is where you've hit resistance. Makes sense. It's also an intersection of the uptrend. Then you're driving the price down. It's pretty bad, right? And then we've pushed back up. Look at all this chop along it, and then it's trying to find support right on that marker. So at this point, I would say we've pretty closely like double bottomed already on this marker. So now what? Well, now we're getting into like crazy minute stuff, but this is pretty much how I would do it. I'm not personally trading this right this second, but I think if it jumped over here, I'd probably be very bullish on that move. At least for the most part, I would be. There's a lot going on here, but I would look at this. This looks like another parallel. It is. It's 43 degrees, so it's setting up on a series of downward ramps. So it would need to jump this guy. Makes sense? So now it's made a double bottom here. This could be it because it's made a higher, yeah, it's pushed up higher. It's made a higher low. In fact, I think it is it. So I think we're going to see a push here. I do. I think we're going to see a push towards 570. If it can hold a higher low here, because when this bottomed, it went lower, but then it pushed to a higher high, and if it can find higher support, it's sort of like a retest, right? Are you going to go back down? You can see the cat ear structure. If this breaks out, it should then, I think it's just going to go way back up. I think we're going to go back to 550. So in terms of a day trade, it might be a really easy one to trade. So I'm going to go ahead and set up a day trade for that, because I think it'll probably work pretty well. Now you got to find the right play. Yeah, I don't know. Maybe 550 if you're going really short term. That's risky, but you might see a big enough push here that, I mean, it's super short term. Maybe go to June 21st, 550. There's not a lot of interest in that. So if you're playing options, I can't really, again, I'm not like the best options trader, but I would say that you want to make sure that it's got a good volume and good open interest. And if it's like crud volume, like under 100 or something, I don't even want to touch it usually, unless I'm going really long term and I expect that there might be a push later, much higher. So yeah, so if this can hold support, I know I've got a lot of markers drawn out here, but if this can hold support and start moving back up, I'm expecting still downside, but I think you could have a temporary push pretty high here going into this FOMC meeting. I really think that after that point, we're going to see it come back down if it did make that move. So I'm not bullish on this unless I see that push. But if it happens, I might go ahead and play a little trade from, I don't know, from here up. I think it's possible. It's a bit risky. And if not, this probably drives low and just hooks. So then we're just looking at the next level down. I mean, these are like fib fan kind of things, but I would look at this guy and, yeah, it makes sense. It's setting up right there. So, anywho, you get the idea. And for something like this, I probably would play pretty short term. Like, I wouldn't want to go too crazy. It's hard to say, you know. It's just going to have equal parts move down if it goes down. So, like, if it doesn't break out, this kind of move down should result in a pretty similar move down. So it go down pretty far. So again, this is not a play I want to mess around with unless I see a pretty big turn here. We could check something else. Let's see if there's any other indication. So IWM is just soaring now. It's at 207. It just found that support and it moved up. GME is still chilling out at 29. AMC is at 518. They look to me like they're trying to bottom and find more support. Maybe they're cooling off indicators and stuff like that. Oopsie, that's not right. Just double click. I mean, this doesn't look bad on the 1 minute. This is like plenty of room to the upside. What about the 6 minute? All right, 6 minute has a lot more downside appearance, but again, it never really made a retest. So you see how it came down and just dropped? So I think there's a possibility that it just runs right back up to the top again here. Since it didn't check it on the way down. It would probably be in the same motion though. Like you would see it jump over this creek here on like 527 and then it'd have a breakout above here. And until that point, I'm still not really confident about it. So early entry would be now, but I think that's early. Why not just do early entry with tight stops? Well, so I do early entry with tight stops if I feel like pretty confident that it's going to go, but I'm not sure like that I want to get the deal. That's more risk on though. So because then tight stops are tough. I mean, you can have it stop out at the wrong point, you know, and then you lose out on the whole trade and you end up just making a loss. And with options, it's kind of tricky because, I mean, they can swing 30, 40% really quick. So if the stop is too tight, it's not really useful at all. If you're trading shares, and I don't think many people want to swing trade shares on AMC, but if you're swing trading shares, you could do something like that here. That would be a lot safer. You're not going to lose a lot of money if it drops a few pennies, and if it comes below, it's nothing. You know what I mean? It's not even going to be like a 5% loss. I mean, it would be like really insignificant. But that kind of a move with options ends up really dragging the price down. So just things to think about. So I'm looking at 550 strikes, and they are coming down in price. So yeah, we'll see. If it doesn't hold, then it's going to come down. I mean, it's going to come down pretty hard. But let's look at a higher time frame. Let's see, like 1 hour. 1 hour just looks like it's retracing back to the moving average. It doesn't look like it's even close to being done necessarily. Although I would say on the 1 hour that it's still like going down. You know what I mean? Like this is a peak. So this is already kind of in a partial downtrend. But there's a small, I would say it's divergent here. It's not a strong divergence. Maybe it is if it went slightly lower. Hang on. The low here is 472. Nope. 457. 456. All right, I stand corrected. So there is a divergence on a strong divergence, bullish divergence on the 1 hour potentially. Now that could be corrected pretty fast. I don't know. It could be corrected pretty fast if the price drove back down hard. This is where you get into things like nitty-gritty, where you're trying to interpret the price action. So look at the volume here. I don't know. I mean, I don't see a lot of. It's kind of interesting. It's like two green, one red, two green, one red, two green, one red, two green, one red. So the red is increasing. The green here has decreased. But I'd be curious because if it rounds off and all the volume rounds off, we might just see, again, that would be like a more of a sign that we might hit that other leg. It doesn't look like a particularly high volume top. The candle itself on the red side is engulfing. I mean, it ate up the other one, and it was less volume. So a lot less effort went into that push down, and it was successful. So that's my big red flag right now. And then this volume on this side on the buy-in, a lot of that is selling here. You see that wick, and it's still like, it still didn't outshine, you know, what we saw here. So I'd say maybe one more low volume candle, and I'd be a bit more bullish about it. Let me check the 30-minute. We ate up like 3. It looks like a rapid fire like shakeout to me. So maybe it'd have to be pretty soon anyways, because of the size of this. I don't think it's going to last forever. So that's not how it usually works. And again, I just kind of have to trust my own instinct on that. So there's a dip down. So it broke beneath that trend, and it went back to this lower red line, which may seem inconsequential, but it is an intersection as well. And I can't really tell if it's trying to break the creek or not. It is an intersection as well of that downward creek. Remember we were talking about the M cross? So this is where things get kind of interesting, because the sun is going crazy. You're going crazy. Andrew, hey. Or go over there with your explosion noises. You were drawing? It sounded like you were making explosion noises. You're just feeling it out? Cool. That's the right way to do it. Yeah, so I was thinking like you'd have to look at it like a range itself. So yeah, I don't know. I still think we get a creek jump here. This could just turn right back around. Be really, really bullish all of a sudden. I hate to be that indifferent or indecisive about it, but I feel like if it just makes that jump, where would it need to retest? Here? 517? All right. So I think if we make the push here and then we retest 517, I'm going to go out on a limb and say I think it's probably going to run. Like it's highly likely based on this setup here. Yeah. RSI has been building up, staying flat on the tops, but building on the bottoms. Looks like it's compressing this way as the price is being driven down. RSI is driven up, and RSI on a 1 minute is super flat. So even if it flushed from here, it's kind of like, well, where would it go? I know it's a 1 minute chart, but we're talking about a pretty small little area up top. We're not talking about like the big picture. The big picture, I'm still like in the middle on. I think we could see it push up to 570, but I don't expect it to just keep running. What about the giant divergence? Well, that's different than, you know what I mean? That's different than, yeah, I think it's going to go. That's different than, you know, I don't know how to explain that right now. I guess what I'm thinking is that the divergence could just be because it was from this bottom. That could be just to get you to that 570 top. And it doesn't seem to be present on every time frame. So, you know, in terms of like a temporary move, so I'm going to try these. I'm going to try it out. If I can get a good order in here, and then if it doesn't break above, I'll just get out. I can get a good order in right here, I might play it up to at least this top. Just play that swing out. Should be a decent move because the move out will at least come above here if it happens. So you can see the fanning motion. It's almost like a beak of sorts. So I'm being a bit aggressive with it, but I don't know if I even got the order in. Probably not. And then IWM's at 207.08. It's just cruising right now. I don't know. It might be going into kind of a double top here. There's less volume on this push up, so that's a little early. It's a little early to tell. But if it were to pull back again, I wouldn't want to see it come back below 205.97 immediately. So I'm going to raise this up to about 205.95. GME looks like it's also kind of building out, maybe for a push here. It's still kind of struggling, but I feel like it's setting up for one more hoorah moment. And yeah, hopefully we get it. I know a lot of people are kind of on the opposite side of that. I'm not anti-bear in this particular moment, but I think that there's a decent chance this gets another buy-in before turning back down. It seems to me, I could be wrong, but it seems to me that you need an upthrust in moments like this when there's like a heavy volume buy-in if you're going to at all come back down. Now, interestingly, you guys would say, well, doesn't that just kind of spat in the face of your thesis here? Not necessarily, because if it sets up higher, I was more concerned about it coming back above the top. I don't really want this to happen. This is like my least favorite scenario, okay? And I told you all why. I do not want it to come back above 6 just yet. I want to build up a support out and then leave later. And it might be frustrating for y'all because you're like, I don't get why you want to do that. Because if it comes above 6, it needs to then either be an SOS with a backup or else it's going to be distributive, period. Like there's no other options there. So for now, it's kind of like I would much rather see like a secondary upthrust here that's kind of a final wave and then come back down. If we happen to lay on top of this trend, that's fine. Or if we chop along it, that's fine. I'm not married to the idea that it has to come down to 470 like today, right? That's not important. It's the overall jump that matters. And frankly, if we were to do that, we might just have a great situation of like, we're just going to do it like an LPS and then go, you know what I mean? And that's one of those things that you can't really predict. You know, there is no spring in that case. There is no return to the gap. Frankly, it could come down to like 480 and hold, or it could come down to like $5 and hold. So it doesn't really change everything. It just changes it enough that the spring becomes maybe almost like a secondary option instead of more of a primary option, which is sort of the way I was thinking about it before. Like it's probably going to spring, right? Just to spook everybody. It could still do that. But I think that if you lay up on top here, if you get the 570 push, that could happen. So I don't know. It's kind of stuck, isn't it? Not really moving. But it made the first jump. It looks like it's trying to find support. It wicked down to 518. So maybe, I mean, it'd be better to see it come all the way back down, but I don't really care. Once it jumps that marker, I'm kind of like, whatever. Yeah, there it goes. I'm going to turn off that thing. It's not noisy. Yeah, I don't know, man. This is turning out to be quite a bit more bullish than I expected in the morning. So who knows? Hopefully the Fed doesn't like rug pull, screw everybody over during their talk. Just don't say we're not out of the woods yet. Still pulling Adam Aaron on us. Well, who? Somebody left the GME play? Citron Research? Do I think they go to 210 today? No. Well, I don't know. Maybe. The 208's more important in my opinion. I mean, like, the creek is up here around 210. So if you're thinking that level's important, I agree. But 208 is the place that we've had the most problems with distribution. So if I were going to say, in terms of a test, I would like to see 208 hold. If you go back to the all-time highs from before the bigger drops, then you can see that that's the place that we really held support and then distributed in. And thus far, every time we've come above 208, we've formed out like distributive tops. So they've created for us a higher creek, which is upward near 210. You're correct. But every time we've come above 208, the range itself builds out as a distribution thus far. So it's important to note that like we haven't passed that with strength since 2021 or whatever it was, and we haven't come back to it with any strength. Like we've kind of breached it and then we've sat underneath it for a while, and then if we came up again. So this week, I wouldn't necessarily think it's going to go all the way up to 210, but I would like to see it come up here and form an actual, maybe it pushes the creek again, but then I'd like to see it form an actual like reaccumulation range and then just go, you know what I mean? And I really want 208 to be like support. So that makes sense. So to me, like anything here that's more of like a reaccumulation would be good above 208. And I don't know. That's a lot to happen in 1 week. I don't think that's very likely. But going into the week of the 24th, maybe, you know, like over here, this would need to find a lot of support right now. And it's doing an okay job, but this huge gap up presents a big dilemma, which is, you know, do we need to come back down and fill it? I don't think we have to because this has already been traded extensively. So what I'm thinking is that this could be kind of a breakaway moment, and maybe after FOMC we get a bigger buy-in or something, and just a wall of support, probably above 204 at least, ideally even above 205. And then if that were to occur, you could basically see that as now a new floor, and we won't need to go back to gap fill. There's no need for liquidity purposes to do that because we've already traded this range below extensively. That's what we've been doing the last month or so. And so there's not really like a precedence to do it just because there's a gap. And if you go back further, it's kind of like even more, you could argue that we don't really need to. There's been a lot of trading that's happened. Right? So, yeah, I was saying like 208 distribution above it, and you can see the triple top almost above there at this point. It's not really a triple top. It didn't happen all at once, but yeah, you don't want it to keep rejecting up there. So yeah, honestly, this is kind of, I don't know. I was kind of making a lot of nervousness about this gap, but yeah, you can go back. You can see this is like the original top when we entered the range is like right up here, right above this 204. And I think if it holds here, we're probably not going to go back down for the time being, like just because of a gap, if that makes sense. Like it's not necessary. Yeah. This would indicate that you've now breached the original. It's kind of preliminary supply. It's kind of not. Maybe it is the buying climax, like the original buying climax here, because the volume came back down. I know it goes higher, but anytime you see kind of an entry into a range, you should be marking off those levels because it's oftentimes really important. And yeah, so that was the first place we rejected up here when we first breached above the top of the previous range. And so we pushed above the auto reaction and we pushed above the phase B top. That's where we stopped. So this whip around here, if it can hold support, I think it's just telling us that we're making support, you know what I mean, where we were previously unable to. So we're pushed up, made a new high, and then we've tested it, pushed it again, and then if it holds, boom, I think you just go. And this is probably where we see a big rocket move up to like 220s before some consolidation. And man, when you look at the higher time frames here, there's a lot of space, but I don't know. I always just think about market shenanigans and like worst case scenario, which is just me maybe overthinking it a little bit, but just remembering in the back of my head, like, it's not over yet, you know? You don't have everything you need to have. This is a great move up, but now I want to see support. You know, I want to see support up here. I don't want to see it just start sliding back through. And if it does slide back through, then you have to find a new support and do it again. And so you're kind of resetting everything. AMC looks like it's trying to push. It did make its way across that creek, did a little backup, double bottomed at what looks like 519. It's having some trouble on the 520s again. It's sitting at 0% on the day. The whole action today has been kind of one massive push down to get back below the open and then, or that gap price, and then we'll see. If we find support here, there's really no reason to think we can't make the advancement at least up to 530 again. So it seems like a really straightforward setup to me. And that 530 is a historically good support and resistance level. So thus far, as you can see, this whole lower M shape has been essentially like stuck beneath 530. That's been the problem area, right? And we were talking about this whipsaw thing, this bigger, we'll call it a sine wave, because that's really what it is. This bigger wave pattern has been whipping around that ascending line. So maybe. Yeah. So the 50-50 goes from where we are now, 512, to 50% is 540. So it looks like, again, mathematically, it's kind of set up to give you an ideal move here. But it has to make the right moves. Otherwise, not confirmed. There's really no confirmation until there's confirmation. So yeah, you see the structure of this right here. So this is the top that we hit after that drop. It's also the place that we kind of ledge drop from. So the middle here of like 539 is like the center point of this battle. And so all of this is giving me like a pretty decent picture of like how this might move. Right, you'd want to see this advance into some kind of SOS, so I'd have to push above 548. You'd want to see it find support somewhere along this uptrend that we're kind of using as a sine wave marker because it's whipping around. You've got the extension up from the bigger wave that would lead you back up there if you can breach, if you can just breach the main creeks here. So we've already hit the lowest one, that's done. I don't know if we're going to go back to that again, but it doesn't seem very likely if we are bullish. Then you've jumped over. We're still whipping around this parallel. This is the place we're going to have a lot of contention, which is, again, why we've been kind of churning from 520 down to why does it say 521? 527 down to 521. Hey. And then you're going to have a possibility again of distribution if it can't even breach here. I mean, there's nothing really guaranteed in the market. And honestly, maybe that happens here. Maybe it happens at 530. All of these could be all of these could be points of contention. So you don't have anything, nothing in the market should be thought of as a given. I'm thinking that the way this is forming with the higher creek, it looks to me like you're going to pocket either high up or right here. And that time would be, you know, spent trying to get above these markers up high. So in terms of the 50-50, it's, if this is the bottom and we finally made a bottom at like 512 for this structure alone, then you would see, you should see it break out. And then if it can reach above 540 with some support at some point, I think you're going to eventually see it come back all the way up to 570. None of that's a given, but it's possible. Based on the setup, it looks even probable. But if, you know, push comes to shove and it can't make that move out, there's too much selling, not enough buying, then that's that, you know. You could still get a hook here and drop. There's no rule that says it has to go up. And these would be perceived to me as like head fakes, basically, and points of rejection. So yeah, it needs to find support. We never really made a retest on 517, so if this turned downward towards 517, that wouldn't really surprise me either. So if we kind of chopped here, went down to 517, that wouldn't be super weird. That would be pretty normal to hit this marker, this intersection one more time. It's about as low as I'd like to see it go, though. I don't really feel comfortable if it drops and makes a new low at this point. Uh, 20 plus price. Can you share with us why that's your target price? Citron, oh wow, is no longer short GME, not because we believe in a turnaround for the company will ever happen, but with $4 billion in the bank, they have enough runaway to appease their cult-like shareholders. By the way, the Kitty live stream was an insult to the capital markets. Yes, it was. Good for you, Citron. You figured it out. That's hilarious. So basically, they're scared and they left. We're scared of retail. We don't like them. We think they're a bunch of dumb money, and then they left. Somebody hadn't learned their lesson. Oh man, that's so funny. Just be quieter. I'm sorry, that cracks me up. Oh man. Yeah, they insulted us. Oh, really? Okay. Sorry you feel that way, Citron. Why don't you take your $1 billion hedge fund and go elsewhere? Take your ball and go home, buddy. That's basically what they're doing. I'm not quitting because I think you're better than me. I'm quitting because you guys are crazy and dumb. And I'm going to take my ball and go home. And it's your fault. You're still wrong. Welcome to the middle school playground. That's an insult to capital markets. I'm going to take my ball and go home. Oh man, that's hilarious. I don't like the way you guys are playing the game. This is my ball, I'm taking it. Wait, you don't like it because you're losing? No. I'm not losing. Sounds like you're losing. No. You guys are the losers. Okay, whatever you say. Have fun with your ball by yourself. What a goofy thing, man, to be like That's such a weird comment for them to make. Just leave the play. Don't even say anything. You don't have to say anything. They said they'll be back around 45.50. We'll be back. All right. Good luck with that, buddy. You never know. They could be right, but long term. But I mean, what if they're wrong? Are they going to come back and apologize? No. Sorry about that, guys. I just had a moment. It just cracks me up. Reading that, I was like, are you serious? Why do you think GME won't issue a dividend and crush shorts? Because they won't. They're not going to risk any kind of, they might do it, but I don't know if they would want to risk this kind of label of market manipulators. They were short Nvidia before. Yeah. Yeah, I mean, you can quote me on that. I don't care. If Citron really wants to take their ball and go home and they're going to be a sore loser about it, then that's fine. To me, that's a greater insult to the capital markets. But I mean, of course, like, oh, I lost, so I'm going to call you guys a cult and leave. I'm just going to call you names. You've already called us names. There's no like, nothing has changed in Wall Street. Dumb money's still dumb money. Like, that's the way they're always going to look at it. And I'm not even like the most apish ape ever, but I genuinely believe that will never change. They're always going to look at us like we're just a tool to make money. Because that's the way the markets run. Like, they're there to take money from the bigger, it's essentially just a big game of predator prey kind of stuff. It's nonsense, but that's what it is. We talk about operators all the time. They're not good guys, you know. I just like to anticipate what they're doing. So I'm trying to pay attention. I'm not advocating for them as like good guys. They're not good guys. They're not necessarily bad guys either. It just depends on your point of view. But they're bullish when they're bullish and they're bearish when they're bearish. Just like a human being, except that they're not a human being. They're like robots, basically, nowadays. Algorithms. Before you know it, they will be just AI controlled. I mean, they probably already are. Yeah, all right. MBW, I don't feel like it got a gap fill. Maybe it came close. It looks like it went to the opening part of the gap, not the actual gap. So it's leaving a little gap right now. IWM sitting at 206.46. I mean, after that big push, it's kind of coming back down. Oh, you know what time it is. It's time to draw a new creek. These are things that are not really that difficult to comprehend. I'm actually going to go from the outer high, not the high, and there we go. I'm just going to leave it at that for now. That's as much as I want to do. I just think that's so embarrassing to hedge funds. It's so funny. Why won't you let us just kill the company? Because we don't want you to. That's how the market's supposed to work. People believe in a company, it shouldn't just immediately fail because one or two institutions don't believe in it. It doesn't make any sense. All right, well, there it was. There was the hit at 5:30. So we talked about this little pocket here a minute ago, this little pocket here. And goodness gracious, cats. I don't know, man. I'm not really feeling anything right now about this move. I'm just kind of watching it. I did invest down here around 518, but I guess if I had to pick one, I would pick upside right now because of the setup and just the nature of the M, the wave. It just seems like it's gearing up for one more push, and it probably would do well to try to push above 548 again. It's coming off right now a little bit, coming off of that parallel, which tells me that it could push again. And then, you know, it's making all the appropriate moves. I don't know. I walked us through it, and I'll talk about the big picture because somebody asked me about that. But I walked us through it a minute ago, and it just, you just kind of check box until it does something different. And if it deviates and it starts doing something that you don't expect, be quick about it, but make a quick assessment. Did it change? Because every play is its own play. Like, it's not a guarantee. Every risk reward. I was also saying this last night in the group. Is like, I don't believe in like a hot streak. I really don't. I think that's a gambling term, and it's basically superstition. That somehow if you start getting it right, you can keep getting it right. But that's not how statistics works. You know, black or red, it's always 50%. You might get it right 10 times in a row. It means jack diddly squat to the probability. Like, probability does not care. So now you might believe in some kind of I don't know, something else going on. But like, I don't need to, when I trade, I don't really want to think that way. You know, I want to make the plans, and if they don't work out, then they don't work out. I'm not in control of anything. So just because like I see something and I'm like, here's what needs to happen, and then it happens, does not mean anything to me. You know, it just means that if I think it's going to end in a bullish way and it ends in a bullish way, that the powers that be also were doing the same thing, but that the money is going that way. Some of that's interpretation, but I'm genuinely not trying to have a sense of false humility either. I just don't want to be, I don't want people to think I'm like getting it right because of some special knowledge or some like hot streak or something. That's just not, it's not it. So really, I haven't gotten it all perfectly right. You've been following me for the last couple of weeks. You know, there's been times where it's like, yeah, it's gone there, but it went a different direction first. And this would be a similar example of that. Like, I didn't really expect it to come above this region at 23 or 540 down to 520. But I mean, then it did, and you're like, okay, well, then what? And the same thing happened recently as well over here. Like, it wasn't that I didn't expect it to move at all. It's just that when it got here, I was like, well, I mean, if it advances, here's where we could go. And then we went there, and I got out of my position because I still thought it was going to come back down. So my conviction remained that it would be down here, even though it didn't take this lower path at all. You know, it went high first, then came back down. I can't really predict every single move in the market. That's not true. But when you get to that place where you're able to sort of see the setup with the waveforms, I find it to be really reassuring, because then I know when it breaks down that it's broken down, and I know that when it's breaking out, it's breaking out. I don't have to question, oh, it pushed resistance. Is this going to be just like every single time, like, you know, a head fake or whatever? And there's plenty of ways to trade in the market. It's not just one way. So right now I'm watching it, and the way that I would trade this is that if it comes back down and breaches below this again, specifically if it comes beneath 517 and maybe generates like a hooking action, I'd be a bit more bearish, and I would probably reassess. Because I mean, you can see on like the 3 minute, this could easily be like an M and another M that still boils down. So that could mean that I misread this initial range, thinking that this was like the first. I might have to get that spray bottle. These cats are going crazy. This could be that, it's not you, it's mostly them, but it's the, this move might not have actually been this could have been part of the downward move. That's what I'm trying to say. Not actually the M shape. So if there's another one here, you could see it drop again later. Anyways, that's not unusual though, just to be a little early. So we'll see. In general, if this wave continues, it's probably going to go up to that. I think it's going to hit that 570 probably around noon, and then we'll see FOMC later, a couple hours after that or whatever. That I won't keep getting it wrong. Gambling bad. Yeah. No. I'm not trying to preach at you guys either. Most of the people that follow here are usually older than me. So you probably know better anyways. But I don't want to make that assumption, but I would say it's likely. So now we've got an issue, which is that we're kind of forming like a pennant, and this kind of stuff, could get you into trouble. And here's why. So there is a scenario here that is a little more nefarious. And that is that this is actually, yes, this is an M shape, but it's just forming the first two. And so if this peaks out and kind of goes flat for a bit, and then you see it race up above, even locally, it could just race up above like 30. That could actually be a head fake, because this is something that we've seen patterned in the stock before. Like, this has been a really common pattern for this operator, these operators, is that they'll do like a head fake above that first cat ear or that second cat ear. So like right now it's like going above 529. So all they'd have to do is push above 529. It would look like it's breaking out of the pennant, and then you basically at that point have a, people would be talking about like a pennant turnaround. And this is the same thing that was happening in that other range. So like, again, like, it's not that I'm not going to necessarily get it right, okay? It's just something that you got to watch for, because it will feel like, and in this case, it actually did it twice. Remember this? This was just a week or so ago. But when it got to that top, it generated that pennant, right? And it actually broke up first and then back down. But it never came above the buying climax, and it didn't really ever make any kind of move that made me think it had to be distributive. So I left the stream feeling kind of indifferent, because I was like, well, really, because of how low this came and how this didn't go above the top, you might still be in a position where you could advance, although that particular action was definitely a distribution and it drove the price low. It ultimately was a spring. So like, same thing could apply here. You could get a localized distribution that drives the price low and technically could still result in like a big bullish action to the upside. It's a tricky setup, the cat ear. So that's where the waveform analysis kind of, in some ways, it kind of breaks down, like, because you'd have to have the right markers here to see like, oh, it's going back down, and just doing a wave check. And I think we've got them, but it's like one of those things where it's like, well, I don't know where else it would be. It'd have to be this guy or this guy at this point. So, a breakdown would go pretty low if it went to one of these. This is really steep, and it's already kind of made that move up away from it. So do I think if it drops all the way down to $5 that I'm going to be hyper bullish? No, but I guess it's one of those things where it's like, I guess it could still be, because in the event that was a spring action, it came back up at 509, then you're just looking at it like a flag. And suddenly this isn't even that weird. It's just a flagging action. So the M shapes, they evolve, they can change quite a bit. And this actually makes some sense too, because it would give you a downward action that would, again, kind of flush out all of the immediate bulls. Almost. Maybe 20 minutes. I said 2 hours, so. Yeah, so the immediate bulls, and then gives you a chance to chill all the RSI junk and blah, 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 blah. So. And that gives you a much bigger run, but it'd also be kind of a mess. So yeah, something like that. So a wave down instead of a wave up would result in a rejection here, and then an equal move down, which is why I did what I did just now. So it's taking that original measurement. It's kind of like an S-curve. And that's how an M shape turns into an S curve. It's usually this price action right here, as opposed to a turnaround, you know. It boils down to what happens on this like second ear, as we call it. If it becomes a distribution in this top, then you could see it turn into like an S curve. And that's why I call the middle of the S curve cat ears, because they're still cat ears. Silly as it sounds. And you know, going from there, there's not much else to say about it except that, yeah, I mean, the same levels kind of apply, 517 maybe, and then this downward move would probably be where that ear would land if it drops later in the day. So instead of going up, it distributes, it'd come back down here somewhere. And then, yeah, you know, it would look like a head fake locally. It would look like it goes slightly above either this top or even above this top, 540. And then you'd have a sell down. The spacing of this doesn't really make me think it has to go one way or another. If it's a wave 4 in an Elliott wave, then you've also got that in mind. So yeah, I'd be looking at, and this is where you want to be as unbiased as possible. 28 degrees. Yeah, I'd be looking at that angle downward. So like this would be a wave that breaks down here. You'd just expect it to go pretty low. And then if it catches and breaks out, then you're good to go again. So I'm not saying this is going to happen. I'm just looking at it and I'm thinking about how this is flat. So really anything goes. There's not really any indication that it's bearish just yet, but because of the flat low volume move, you have to just kind of consider the possibility. GME is really moving, finally, going to those price targets I wanted to see. I mean, if it hits there right at the dot, like the dot, that's cool, but I wasn't really expecting it to hit right there. It looks like it's going to do it. This will be a good target if so, but I don't really expect it to necessarily hit right on that spot in like the next 20 minutes or whatever. Be a cool little case study though, wouldn't it? I feel like nah, he won't cut rates. He's not going to do that. You can't just announce it all of a sudden out of nowhere. He'd have to change the whole timeline, and they're not going to do that. So I think that's so unlikely, in my opinion. They'll be back around 40. Well, like if this moved up to 40 right now, I think they would be right to probably, I don't say they would be right to short it, but I would think that, yeah, I could come back down. So yeah, that's not even like that weird to think about. AMC's pushing, so this is it. We're going to see if it makes those advances. I'll tell you this much. Usually if the second cat ear, as we call it, if it breaks down, usually what happens is you get those up thrusts and they just keep failing to advance. You'll see something like this where it looks really weak, and then it finally like breaks down and it has like one more gasp, and this is where you could have it kind of come back up one more time or not, and then it drops. So like typically if it's weak, you might see something like that, and usually there's a sign of weakness early on, or maybe multiple signs of weakness, you know what I mean? And then you'll see it like trying, and it goes. Usually if it's bullish, what you'll see is that maybe the first advances fail, but a lot of times they don't even like go very far. They might just like barely, you might get even like a double top or something, and then you end up with a kind of a flat area, but then you get a push, and you usually just get the M shape higher. So you see the same markers. It might come down pretty low on the next one, but then you end up going up.
so it's the same like motions in terms of like up and down. This is the easiest to read bull scenario that I can think of, which is where this is like basically like chopping up above and finding support. It's really straightforward. And the M shape tends to be much more like vertical in nature because it's crossing. So as opposed to this, which, you know, has like repeated up thrusts but can't seem to make any advancements. So we'll see. Oh, it's just going, Booksy. I know. Things get exciting sometimes. So you're saying, what you're saying is, that's not going to happen. I don't know. I mean, the top here is really high. It's at 540. So it's possible that this is all part of a gigantic cat ear setup. So you still have to be careful at 540. I don't like to like overthink it too much beyond what I just said. Like that kind of cross here needs to happen. But sure, like technically if it came above 540, that's the previous support. That's a place you could find resistance. So you still have to watch it and make sure it doesn't start sliding back down through the creeks. Then it just looks like a really pointy cat ear, right, on the big picture. So what would be better is, and this is usually what I advocate for, instead of advancing too early and risking a distribution, is I usually advocate that it comes up, finds a lower top, and then finds a higher support. And then when you break through, there's not really anywhere else to go. Like you've got a support right there. It makes it a lot simpler. So for example, if that's as high as we went, just an example, because we might keep moving. Like if we went up to 538, you could see the price drop all the way back down to 527, but it didn't come above the top. So at that point, you're like, well, it's really done is broken the creek. It hasn't tried to push resistance yet. So this is makes it really simple, because then you can be like, all right, well, next time it comes above 538, if it finds support there, now I have like, let's just call it like another bottom. We have another spot here where we have support, and then it's a lot easier to read, I guess is what I'm trying to say, because you know if it comes above and it comes back down, you could have support. What if it just rockets though? I don't know. Then it just rockets. I don't know. Like there's not like a one size fits all for these kinds of things. Yeah, I mean, so now I'm like nervous because we didn't really make any lower supports and we've pushed higher. So we made a higher high than we did earlier today. So you have to keep in mind, like there's the creek, which is pretty low. It's way down here at 527, maybe 530. If it just leaves it behind, I'm pretty sure we're going to come right back down after all this is done today. So if we don't check it now and we just keep advancing and we build up higher, there's a stronger likelihood, in my opinion, that that's a marker for a future pullback. And we want to keep it on the chart. So if we do pull back now and we came all the way back down to like 528 or 530, I'd be a little more comfortable if it then advanced again. So stepping stones, right? So GME is now at 33.27. It hit the marker pretty darn close timing wise. So, you know, you were asking me earlier, why do I think that it goes to 22? This is the same kind of setup. Like it's really similar, this concept. So what I'm doing here, I can do this on the macro. So I don't, without even kind of going into great detail about it, that's really why. I mean, that's the reason why I believe it can go up to 22, and I was able to pinpoint it. Because the macro setup is set up much like these like little micro waves, not microwave, but these smaller waves. Does that make sense? So if you can do this kind of price analysis and target stuff on the small scale, you can absolutely do it on the large scale. And I've been doing this for months now. And sometimes it pans out and sometimes it doesn't. Sometimes it takes forever to get to where you think you're going to get to, because this is almost exactly what we just experienced to some degree on the large scale. We experienced a big drop off, right? We had a platform, we dropped off, and then we started a shallow S curve. This just happened. It was the last 10 months or whatever. That shallow S curve in the previous drop off area and all that stuff, they provide you with all kinds of nifty little intersections that could happen later. And the most prominent one is this one that I was looking at, that's a $20.77 intersection. Now, it doesn't have to hit there in regular trading hours, and just like that 14 target we had, it didn't really get there in regular trading hours. It only happened in extended hours, but that's the target, right? And so that was the target I had for the 13. It hit the 14, it hit the 14. Okay, but it opened at like, what, 10 or whatever. So you didn't have the opportunity to trade it necessarily, but it hit the target. And there's nothing I can really do about that. We also have a 2207 target for July 1st. So the build out for that makes a lot of sense mathematically because of the setup. So mathematical setups here does not guarantee that it's going to happen. And I know this looks like a cluster cuss because it is. But the setup here is pretty straightforward. Like, you have essentially like a new uptrend that peaks out at 2077. That's the intersection of the major first creek that we have, which goes from August of 2022 to almost August, but July of 2023. So right now there's a really strong intersection right there. Now, we could go about making all kinds of crazy diagrams to try to find out where else there are intersections there. But this was the easiest target, right? Because in a shallow S-curve, I mentioned this several times, but in a shallow S-curve, the build-out is such that once the S-curve is done, you go back to the top of the shallow S-curve. And it just basically never fails as long as it forms a bottom. And so when we got to this bottom, I was like, well, you know, around May 1st or so, and it started building out here, I was like, I don't know. It doesn't look distribution to me. It looks like accumulation. It looks like this is a finished M sequence, like 1, 2, and then this is like your spring area. I was like, if it jumps the creek, it's probably going to go all the way back up to like this $14 mark here where the S-curve started. That's as simple as it had to be for me. And I bought in and made good money on it. And it's not about overconfidence. It's just that's the pattern. And if it plays out on the micro level, why wouldn't it play on a macro level? And then we had other things, like we had a really long several month divergence after January coming down where the RSI was building up. The price was dropping. There's all kinds of stuff that we talked about. I kept looking at it every which way, you know. This is a macro creek, you know, from way back. This is like a historic bottom from like way back. You know, it tapped like the original trend here. You know, and there's so many things we could look at, but it's like this goes way back, you know, there's just so much. And I could talk about it for hours, and I have talked about it for hours. I've talked about it for weeks, for months. There was a macro creek coming down here that was looking like mid to low threes is where we would end up forming some kind of a bottom, and that's where it happened. Now it went lower than that. It went to 250 or thereabouts, and it's like, well, 250 was the sine wave bottom that I had made earlier. So it was like everything was kind of just clicking. Like you've got the setup, you're hitting the targets that you had expected to hit. There are some lower targets still that could happen, but then I started looking at this setup, and I'm looking at the build out here, and I know it's hard to see because of all this crap, but there's a really, really important secondary wave here, and that's this guy. And if we push far enough away from it for long enough, and this is my concern about running prematurely, right? But if we push away from it and we build out into this T35 date on the 17th, and we've got that options buy-in on the 21st, we've now situated ourselves to have like a perfect run essentially out of here all the way back up to that trend. And that's a waveform analysis on that trend. We just did this on the micro, and it happens. It doesn't happen when you're at a top every single time, but if you're in a place where you've formed out and you're creating that action, that waveform action, it's right there, right? And I mentioned that if we make the right moves going into the end of this week, I'm going to clear my chart, and I'm just going to use like this line right here, and I'm going to use this line right here, and maybe that one. I'm probably not going to need much else, because at that point, you're really just looking at horizontal levels. The big danger right now, and the thing that people have been most worried about, rightfully so, is that you need to come back down and check this creek. And historically, when we don't make those moves down, we've had bad things happen. Like, for example, June. Then you have 3 years of downside, right? We may not be in that kind of a situation right now, but there's a lot of other stuff going into this. But I think that's a possibility, so keep that in mind. But it hasn't broken down yet. So like the concept of it breaking down, you'd have to be sort of either just assuming that that's definitely going to happen here and then buying in for a downside move or whatever. But so far, this is the other thing, is like I was looking for a reaccumulation. So we had this downward move, this kind of weird, long, shallow S curve, right? It pumps back up, starts making higher highs. In the grand scheme of things, it's very similar to what we experience here, where you pump up and then you're coming back down until you jump a creek. And I'm seeing the same kind of patterning here. And then, of course, in comparison to something like January of 2021, there's a lot of similarities in the setup. And that's what I was mapping out on GME, right? Because I was like, well, GME looks even more like that. It's actually hitting the same fib markers. It's building out towards that last major creek. I mean, it's literally like not missed a beat here. I don't know how else to say that. So if eventually, if it does miss a beat and it starts, let's say this head and shoulder plays out, yeah, then you're in a different situation. But I made a case yesterday that the reaccumulation looks a lot like a head and shoulder. And frankly, all that's really required is that you jump the creek and then you advance above this parallel. So, and it's not a head and shoulder. You know what I mean? Like, so this concept that it has to break down to like 17, that's shorts just being shorts, And now that they've lost one of their bigger players, it's going to signal to them that this is a problem, right? And as soon as Roaring Kitty starts executing those options, their shorts are going to be running to the door. So I don't really feel like there's a whole lot of danger of that downside, although I do think it's possible, and there's always a probability that happens. I think it's a difficult sell for me. Like, this doesn't really read like a head and shoulder to me just yet. It looks more like the setup of a reaccumulation, and that's what we've talked about. So, yeah. So, when I look at that and then I look at the picture here, I'm like, oh yeah, there's a whip around that could happen. And if it times out correctly and it's going into this 21st, this should give you a pretty big move. Now, if it goes a little early, it changes things. But you basically have a perfect 50-50 now above where the SOS would be, which is at 48. The SOS would be about 48. That's why they're saying they want to enter at 40 or 40 to 50, by the way, is because they know that if it's going to distribute, that it could happen above 40 to 50 right here, because that's where the distribution would happen in a UTAD, upthrust after distribution. That's saying, so it's selling off. They think it might come back up to 48. That's where you'd have a sell-off again and a bigger cattier, right, and it would drop. But if it's an SOS, guess what? 1618 is 142, and now it's a perfect 50-50 leap from there across that waveform creek up to the 1618, which would be an extension of this move. So I'm betting heavily on 145. I'm not saying it's going to get there necessarily. It seems like a pretty sure bet that we'd probably go back to 48 first, even if we were going to go down to 17. That we wouldn't just drop here, that we would instead move up and then drop again. So that's my TA. So I'm very confident maybe that's a folly, but I'm very confident that if we can see this build up, it does not have to be exactly like January. It does not have to drop all the way back down to 460 like today or something. It doesn't have to do that. That's not what I'm trying to say here. In reality, there's actually already like an outer creek that I haven't even drawn, which is this little peak, right? So there's already kind of a build out that's a little bit wider here. So you could see it jump here and push, forming like a new top, right? Which, by the way, is already there. That kind of points towards that 570 area from the previous two peaks back here on the 6th and 7th. All of that gives you a huge amount of space in here between basically where we are now, this 520 area, and over here, just as the crow flies, just straight across over here to like 550. That's a large period of time, though. So like everyone's expecting, they're really bullish, everybody wants it to just go, but really there's an incredible amount of time here. I mean, technically this could run until June 25th and not ever leave this outermost creek, because they could just go sideways up in here and form a giant wedge, you know. I don't think it's going to take that long, but I also think that it's not going to go immediately. So that's where I'm at. Makes sense? So I'm of this opinion that you have a lot of possibilities. I don't think there's one possibility that fits everybody's kind of cup of tea. And as a result, I think you're going to have a lot of different opinions about it. But for me, like, I can't do anything but just kind of watch my own targets and then act accordingly. So for now, like on AMC, I think it's already kind of come higher than I expected. For GME, it could come quite a bit higher. I mean, we could see it come up to 40. It's not impossible. I think, though, that on the whole, when I look at this setup, this to me looks like the 50-50 around the previous creek here. So this is the jump, and then it's jumping again. I'm seeing it more as like a wind-up. You can kind of tell the direction I'm pointing. Kind of seeing it as like a wind-up where we're going to build a creek and then jump it. This, to me, would be not just logical, but also really effective if you're going to stage a run back up to the 50s. Is just build out a creek here, right, during all this FOMC, options, FTD nonsense, and then advance after. And you've got plenty of really simple targets that you could then hit as you advance. So all of that stuff is debatable in terms of like timing, but yeah, to me that looks right. So, and I could see it easily building out a reaccumulation here. This would be like super straightforward, you know. It doesn't have to be exactly like this. I'm just saying. So yeah, I do think it's very likely we come back down one more time regardless and find another support. I think in this case, something around $26 makes sense because GME actually already filled its gap. I don't think there's a need to kind of come low again. AMC is a little different. AMC did not fill its gap, and I don't think it has to. And I was actually saying the same thing about GME. I was like, I don't really think it has to. But I think it's a possibility that after we hit 570, AMC might see a steeper slide down than GME. We may end up coasting back down along this and then coming pretty low. We might go for a spring. We might go for a lower move. Because right now, that seems like a possibility, you know. It's not inevitable. It's just a possibility because they could tease out that gap quite a bit. They already used it once here to drive the price really low. We didn't get it. And this didn't get met, by the way, the same kind of gap on that reaccumulation. It didn't get met in January of 2021. There's also a gap there. And we've talked about this, but it's right here. So after the buyback in, there's a reaccumulation that sets up high around the 0.5, 618. And that one never goes back. It looks like it's going to go get the gap, but it doesn't actually ever get it. And then when it comes back down, it's just a LPS and a retest of the support, and then it leaves. So a similar situation on AMC would be us coming back down to roughly this like 460, 450 area and not ever making another low. or even like higher, like 470, and not making another low. Does that make sense? I hope so, because I think that's kind of the gist of it, you know. Yeah, and everyone's going to be looking at it like a head and shoulder, but geez, Louise, if there weren't a lot of head and shoulder setups back here, there were a ton of them, you know. And it just kind of depends on how you interpret those. And we looked at that schematic yesterday with Wyckoff. The Wyckoff accumulation schematic has a head and shoulder in it early on. It just doesn't break down. It's not a continuation. The danger, of course, being that accumulation looks a lot like redistribution, and those schematics, very, very similar with very minor differences, can be kind of misleading. So yeah, this is why I'm cautiously being very, very bullish, because I feel like I've done the due diligence. I've done what I wanted to do in terms of getting to the targets that I want to get on the smaller scale. I'm making advances in terms of my portfolio. I'm trying not to be sheepish about anything. You know, I want to be obviously doing it with some strength in my positioning, but at the same time, I think there's plenty of space here for build out. And then when the time comes, that's when it's time to like really go all in. Like, even if, you know, you may not agree with that. You may be like, well, I think you should just. That's not my goal, right? Like, everybody's got their own goals in mind. So I told you guys I was playing $30 strikes for the 21st. I'm out of those now. Even if it goes higher, I'm just out for now. Because my goal was not to play beyond 30 to 35. I'm at $33 right now, which is right in the middle. So I feel like good play on my part, not looking for much else. I'm happy with that. And so that price improvement was a lot, and really good trade on my part in terms of like the amount. So I'm happy with that. Make sense? Okay, I hope so. So it's about 100% trade again. And I'm not going to trade it farther because I don't really care at this point if it goes farther. Well, if my setup works out and we get $20, and I say my setup, but I mean like the stock setup, the setup I've identified, and I shouldn't call it mine. If the setup I've identified works out, I really genuinely think we're going to get 20. If we get it in aftermarket and it drops, I think we're going to open around 16. 16 is another one that I keep getting, and I don't know what exactly it means, but yeah. So I don't feel like there's anything to be worried about. Thanks so much, SC Formula. I hope you've been making some money on this play. I didn't see it till just now as I was ranting, but thank you very much. I really do appreciate it. So, very special day for me. Today is my 14-year anniversary with my wife, so we are going to have a special dinner, and so I really do appreciate that. And I'm not saying that to get some kind of weird super chat thing going, so don't give me more money. It's totally free, this stuff. I'm making money playing the stocks, so don't worry about it. But it really is. We were married on June 12th, 2010. Easy number for me to remember the year for the anniversary. 14 years. And, you know, in a lot of ways, we're better than we've ever been. You know, there's been a lot of hardship, just like any marriage. Some things are worse than others, but my wife is amazing. And she is definitely a huge part of the reason that I'm here today talking to you. So it's like I wouldn't do this without her encouragement. So it's been a really, really good thing. So we're kind of stuck here in the middle. And not really sure what to make of that. I kind of said earlier we might get stuck in the middle, but I wasn't really wanting to get stuck in the middle. Great. All right. So I'm gonna get rid of this. We kind of know what that looks like, and I already kind of know generally where we go. So I'm gonna get rid of these orange boxes. I want to kind of clean this up a bit. I need to see. Yeah, we're doing all right here. I need to see where that AMC position is real quick. As I got enough of those that if it went up a good bit, I might ease out some here. Because if this ends up being distributive, this is kind of the moment right here. It would be because there's a, it's not the flattening that really worries me. It's the flattening right above that creek, and you can see that drop. So I don't want to like wimp out on it, but I also don't want to hold this forever. 20% gain, that's not the best. I think I could do better. You guys are like 20%. I think that's a good gain. If I were just, again, for a swing trade like intraday, that's pretty good. So I shouldn't say like it's not enough. That's kind of greedy. It's a good trade for intraday. If you get like a 15 to 20% trade intraday, you're doing well. You know, you're trading effectively. The idea of getting 100% on a trade is kind of crazy unless you're trading something like this, which is funny. I got the same move on AMC. I got that 100% and then chop, you know. We're almost there. Okay. You want to get ready? You can.
But I wouldn't play with a girl.
Okay. Well, then I'll come knock.
But right now?
When I'm done, yeah. Come knock. I'm about to be finished because I got. So yeah, I'm gonna take a break midday here. I'm gonna come back for FOMC. I talked about this yesterday. I don't want to like leave you guys hanging, but I told my son I would go play with him, so I'm gonna do that. And what I'm watching for right here again is that final push and continuation. Feel like we're getting support, but just based on the way this is set up, this could be a. I mean, it looks so good, but it's also dangerous. It could be a distribution. Yeah, let me make one more marker here. I can leave the stream on, but I don't think a lot of people want to just sit here without audio, so I'm gonna probably just close it for a while. Thanks, appreciate the congratulations. So how old are you? I was married when I was a child. No, I'm just kidding. I was an adult when I got married. You guys are funny. No, I don't feel guilty about leaving. I'm just telling you, giving you my reasons. So 20% is more than zero. 14 years from when the world ended. You guys are funny. I guess for some people, yeah, marriage can feel like that. I don't really ever feel like that. I feel like it's been, well, I guess there have been times where I felt like that, but I'm just being honest with you. That my wife would probably say the same thing. Like, there's definitely moments where you're like, oh my gosh, what am I doing? And then most of it's, I would say it feels like everything feels better. I don't know if you got the right thing going, and if you're willing to work with it. There's a lot of benefit, but it's hard work at the same time. don't know. People think that's like not love or something. I think that's baloney. People that have been married for a long time could tell you that there's a lot of work involved, and it's good. It's weird too. It's like we're so I don't know, as a culture, we're so used to this Hollywood crap with like love is this feeling, and if it goes, then it's just gone, and you're not in control. And it's like, well, that's dumb. That's not really true. It's definitely more of like an action, and then the feelings come with it, and it's choice, just like anything. I'm totally not on board with that Hollywood lovey-dovey crap. I think it's nonsense. I think there's a point at which, yeah, like you can work and work and work, and it's just not going to work. But that's different than just normal work that you put into something. Because like we're not opposed to sitting here and putting in work and like fixing the things that we get wrong and making, you know, mistakes and learning from them. And like I don't see why somehow like an institution like marriage would be somehow like less work than something like this. Like that's sort of dumb. But anyways, I don't know. I was just talking about that because you made a joke about the world ending. And you hear that kind of stuff a lot. You do. All right, so IWM is coming back down. And I don't know if I like that it came below where it did. But frankly, at this point, who knows? You just kind of have to wait and see where it is during the meeting this afternoon. I'm not going to try to over-predict this. I didn't want it to come below that point because I figured if it did, we might be in for sellers' advantage where they're going to try to drive it low. At the end of the day, though, this little orange pocket that I drew is probably the most critical. So we've still got some room down to like 204. And then I don't perceive GME going significantly higher. It hit my target, so if it goes higher, cool. We'll take a look at it during the FOMC meeting. And then same with GME or AMC, like it looks like there could be another leg up here. It just has to make this support and hold it and push, and you should get that 570. If you're just looking at the head and shoulders and you were only looking at the head and shoulders, then GME already reached it because that blue line that you see coming down is the shoulder mark because GME is at an angle. And they made a lower low here, and it lines up with these parallels really well. So if you look at where that shoulder is, it's actually right along that parallel. So potentially this could come up to like near 35, but I wouldn't expect it to go like rocketing way beyond necessarily, you know, because it's already at that shoulder height. It's at a steeper angle. Okay, that's my just 2 cents about that. AMC is a little different because the shoulder height is very flat, and it did come up to 570, and then the shoulder actually made a slightly lower low, but not like significantly. So you might expect it to come right up to about 570. Okay. For IWM, I'm just kind of watching this area between 205.70 and 204.80. At this point, I think that retracement might be too far. It could still make a higher low. I'm liking that the volume is low, but that trigger that went off was the support from down here. So if it broke, you might have sellers driving it down. So really just want to see if it can hold above 204.80, which is tantamount to the previous top from over here. It's very close to the June 5th top. If you want to look at that, or these, you can go way back and look at historically where that is. I haven't really talked about MPW much this day, except just to say I thought it was probably going to reject around 5, and it looks like it did. It actually rejected a little higher. So it went up here to like 504, 505. I think it could be, if it's an LPS, it's just going to fill the spring and then fill the gap, and then it probably won't obviously go below this creek, this red line. But if it's a spring, I think they're going to drive the price down below 480. That's where I think it'll go. It doesn't have to go that low. Maybe only like 483, but, you know, because I guess this bottom is 485. So technically, as long as it goes below 485, and then I would want to see it build support on the way out in the case of a spring action. I don't think any of that's going to happen before I get back today. But I think that maybe we'll see some more down here. And then it's kind of it for now. We'll just have to wait and see. I know I might be missing out on the big AMC push, but I don't really care. I'm going to set a, probably set a stop loss on my, or a trailing stop if it works on my AMC calls. And then I'm going to go hang out with my kiddo for middle of the day here. I will be back for the FOMC meeting. So that takes place at 2 p.m. Central Time, which means it's about 2 hours from now. So we take about a 2-hour break, and then I'll be back. I will try to stream it. Sometimes when I stream it, it's not the best, so it's totally up to you. I'm not going to comment on him talking until we get to maybe the Q&A, because Q&A tends to be kind of redundant. Like, they just ask a lot of the same questions over again. So when we get to the Q&A part, if there is a Q&A part, I'll talk, but usually for like that 10 to 15 minutes where he's just talking, I'll just listen with you and we'll watch the chart. And I'll live chart, but I'm not going to talk you through it. And I prefer to do that. Some people will trade FOMC on the YouTubes or whatever, and they'll talk about their trade only and they won't watch the stream. I'm not really looking to do that because I'm not here to like impress anybody with some kind of massive trades or give you guys like this silver bullet of a trade. But if you want to do that, there are some YouTubers who do that, and some of them are pretty successful. So it's not like, I don't think it's a bad thing if you don't want to tune in to my stream. If you'd rather do that, that's totally cool. I'm not going to be doing that, so that's why I'm telling you. I'm not going to be like, here's the trade entry, here's the exit, let's go. You know, that's not what I'm going to be doing. So if you're looking for that, that's elsewhere. But yeah, I think that there's a free therapy. Yeah. It's funny. My therapist told me that I could be a good therapist. So whatever that means. I was like, nah, I don't really want to do that, but I don't want to listen to people. I want to talk. I'm just joking. Yeah. So don't panic. Today is going to be wild. So we knew today would be wild. It started off crazy. I'll be back in a couple hours. So thanks for everything. I appreciate you guys. I'll be back on to stream this afternoon. Yeah. Hey, Rosalind, just so you know, like real quick, I don't know you, but I just want you to know you're not alone. That a lot of people are in this play long term. I know I talk a lot about options and stuff, but I still have my positions from like way back. So I still have a really high average and all that stuff. So my share position is different than my options position. So I'm talking about swinging options. I'm like talking about very short term stuff usually to like leaps maybe for like the bigger moves. But in terms of like a share position, a lot of people are probably in the same boat as you. And I can tell you that I personally am in that boat. Like I have a high average. I'd have to go check. It's pretty high. So like nobody really enjoys necessarily being down at 5 unless you can average down, or, you know, if you're going down lower, you can average down, but those are just choices that you have to make. And ultimately, if you don't want to throw more money at it, then you're just going to have to wait. And, so don't worry, you know, worrying doesn't change anything. That's my advice for you right now. And, I can give you that advice. I can't give you financial advice, but I can give you that advice. But you got to just decide what you want to do in the meantime. But, anyways, I'll be back for FOMC, guys. Thanks for hanging out, and, I'll come back in a couple hours.